Today, guys, we're going to use our good old friend Chatgpt. If you guys are not using it, it is a wonderful tool that you can ask it any question you want and it will spit out a relatively correct answer. It's not going to be 100% perfect, but it does a pretty dang good job at answering your questions. And one thing I did ask it is why you should trade futures versus options. Now, I've been trading for 3 years, almost 3.5, and I've gone from options to stocks, back to options, and now futures. And I found my most success and biggest payouts have come through futures trading. So stocks are great as well as options, but one thing, if you were comparing maybe options versus futures, is the PDT rule. When you have less than $25,000 in your account, you are not able to place unlimited trades on either stocks or options. So Chatgpt basically says here, hey, these are the top 3 reasons to trade futures versus options. And that was one of the first ones, is the pattern day trading rule. Even me, when I first started and I got into trading, I, had to use a lot of my own capital. I had to save a lot more money to reach up that $25,000 to place, unlimited trades throughout the week. Because if you have less than $25,000 in your account, you're only allowed to place 3 day trades. Another reason I like futures versus options better is that you still get the same leverage, but without any time decay. So lots of times you enter a trade in options and it's going up and up and up, but it's taking a little longer than you expected. With the Greeks or just time decay and short, your contract will lose value. So if I enter an option at, let's say, Tesla, for example, is at $100 and it goes up to $102. If it takes too long or it gets too close to the expiration date, it might still go my way, but I could be losing money on that contract, where with futures, it's super defined. So if I go in at 100 and it goes up to 101 or 102, I know exactly how much I'm going to make as well as how much I'm going to lose if that stock drops below that certain price. So last thing is just the ability to have high leverage using prop firms. It's basically, prop firms are an easy way to use somebody else's money. So you can get 25, 50, 100, even 150K accounts where you can trade with someone else's money. Obviously, you're going to have more rules when you're trading with somebody else's money, but it is a lot easier to trade with futures because the barrier to entry is a lot cheaper versus having $25,000 sitting in your bank account before you can start trading. So if you guys got any questions, feel free to throw them down in the comments below, as well as let me know your thoughts on why you trade futures, or maybe you like options better. Let me know.